So welcome everyone. Thank you for joining me today for the Managing Credit Wisely When Your Income Drops. Today is April 14th, 2020. So today we'll be covering a few different topics. Some of it has to do with credit, obviously. A little bit has to do with some of the CARES Act provisions, and then some strategies for how to handle different kind of credit issues that you may face if your income drops. So to start out, I just wanted to say I'm really pleased that the Delaware Money School, the Delaware Division of Libraries, and the University of Delaware Cooperative Extension have partnered to try to offer some programming over online to provide some educational information and resources to our citizens in Delaware. So I'm really pleased about this partnership. And as you see going forward, there'll be a whole variety of topics that we'll be offering. So I just wanted to start out and talk a little bit about the Coronavirus Aid, Relief, and Economic Securities Act, or what they're calling the CARES Act. And because when we kind of think about and are stressed about, how do we pay for our debt? One of the chief pieces is, well, where will money come from in order to help do that? So I wanted to share a little bit here. As you may know, there will be direct payments to citizens. And so every adult will receive $1,200, married couples $2,400, and then another $500 per child. That, from what I understand, will be coming out within the next 3 or 4 weeks if you have direct deposit. If you filed a tax return and they have a direct deposit information. If not, it will be coming via mail. And what I've heard there, it could be 6, 8, 10 weeks before that comes. Another kind of part of that act was sort of the release of penalty regarding the use of retirement funds. So typically, if you're not 59 and a half or over, there is an early withdrawal penalty. And if you withdraw money from your retirement account. And so what this act has done is sort of repealed that temporarily. It allows you to withdraw money without paying that 10% early withdrawal penalty. But it's important to know that you'll still have to pay taxes on that, but it won't necessarily have to be paid all in 1 year. They're going to spread it over 3 years, but then you also have the opportunity to kind of pay it back. So that's good, and it frees up a little of money that might be in your retirement savings. They've also increased the limit in terms of the amount that you can borrow. And so you can see it's moved from that $50,000 amount to $100,000. One of the other interesting things that has come out of the CARES Act is that for credit reports, it requires lenders to report credit bureaus that customers are current on their loans if those consumers have sought some sort of relief. So what does that mean? Well, that means if, say, I have a mortgage or a credit card and I'm not able to pay on it, and I've contacted my lender and I've talked with them about it and maybe set up a different payment plan and whatnot, or they've deferred payment for a little while, that credit lender isn't really allowed to share with the credit bureaus that action has taken place. So it kind of saves our credit scoring or the outcome of a shift in our payment and the impact that may have on our credit scoring. One of the other things it does, and this has been on all over the news, but this whole notion of having a coronavirus test, and that will be offered at no cost to participants. So that's a savings. So what about unemployment? That is one of the other things that has really changed. Many workers who weren't previously covered by unemployment may now be covered. And so here are some bullet points about who now can be covered. And so if your employer has permanently or temporarily laid you off due to corona measures, you can apply for unemployment. If an employer has reduced your work hours, if you're self-employed and have lost income due to the coronavirus situation, if you're quarantined and can't go to work, if you're unable to work due to risk of exposure to the coronavirus, or if you can't work because you're caring for a family member due to coronavirus. All of those are good reasons why you can go and apply for unemployment insurance, which I know, we've probably seen it on the news. It's been a little hard to do that, but certainly having that income flow in will help you manage covering living expenses and debt during this difficult time. In addition to expanding eligibility, the CARES Act has also increases the weekly benefit amount that states can provide until July 31st. So it's an extra $600 that they may be providing for folks. And it also provides an additional 13 weeks of benefits for people who are still unemployed after their state benefit runs out. So those are great helps to kind of keep the income flowing in during this difficult time. So oftentimes I get the question like, okay, if my income drops, how do I prioritize what I should pay for? And so I've kind of organized this into 4 different areas. Certainly any expenses that help keep your job and your income coming in, those should be a priority. So those may be things like car, transportation, tools, equipment, certifications, daycare, those kinds of things. Those expenses that really allow us to keep going to work. Another area is insurances, right? And so insurances are, used to kind of be risk protection, and they kind of create that security blanket around you. And so things like auto, home, renters, health insurance, all those should be a priority in terms of the money that you do have needs to be spent towards those things. Thirdly is housing expenses. These are the things that are going to keep the roof over your head. So mortgage and rent, property tax, sewer, gas, water, electric, garbage, all of those things that really keep the roof over your head and keep you safe and secure. And then lastly is those credit cards, loans, child support, alimony, those obligations that you have. These 4 areas really are top priorities when it comes to kind of figuring out, all right, when my income drops, where do I prioritize how I spend it? Sometimes I get a question, should I use credit to cover living expenses? And, my kind of short answer is not if you can help it. So you really don't want to jeopardize your future with trying to pay down debt, that you've accumulated now. So using credit to help cover living expenses kind of puts you deeper in the hole later on. And so it's really about looking to really cut living expenses, ways for doing, keeping some income in if you can. Maybe it's part-time, maybe it's, what they call gig jobs, and prioritizing that spending. One of the things I really encourage people to do too is consider creating what I call kind of a cash flow statement. And so what you're looking at in this diagram is kind of a week by week by week flow of money, right? What's coming in and what's coming out. And so the idea here is to really identify, all right, what are the money that is coming in and when, right? Which week is it coming in? And then what is flowing out and when? And so you can see in this example, in our first week, it's filled out. And so from the previous week, we have a $250 balance. That's what's kind of up here in this block here. And then we have $400 coming in. And so our total amount that we can spend is really $650. Then we can start subtracting things out. The remainder at the end of this week is $400, which then becomes your beginning balance for week 2. So again, it takes sort of some planning. understanding what that cash flow is, what's coming in and when is going out, and putting together kind of this plan for how money should be flowing in and flowing out as best you can. Okay, so what about if you're worried about making auto loan payments? Well, there may be a few things that you can do to kind of really help yourself, right? One may be to speak to your lender, right? Ask, maybe you can change the date of your payment, and that may align better for when income is coming in versus flowing out. You might be able to request a payment plan for the months that you have missed, meaning down the road a piece, say you missed 2 or 3 months worth of car payments, you could connect with the lender and say, look, I want to make up what I didn't pay, and can we come up with a payment plan just for those 2 or 3 months? And so what you're doing there then is, once you're back on track and you're back to work and you're earning, you're paying your car loan the way you normally would, plus paying a little bit extra to make up what you missed in those 2 or 3 months. The other thing you could do on the third bullet here is really ask for a payment extension or a deferral, meaning you're basically asking for payments to be put off for 2 or 3 months until you're back to work, right? And then resuming those payments. So sometimes lenders will let you do this, once, but maybe not twice. So again, this may or may not be an option depending on what you've asked for in the past. And then the fourth area would be really refinancing your auto loan, either through your current lender or even a different lender. And, with interest rates sort of dropping right now, it may be an okay time to kind of think about finding a different lender who could offer you a lower interest rate and maybe even give you a longer period of time in which to pay off the loan. So those are some options for auto loan payments. What about student loans? So student loans are another big area of debt that many young people are carrying. And again, part of the CARES Act was helping to help defer payments for student loans that are federally held loans. And so you basically don't even have to make a payment because of the CARES Act, it has been suspended until September 30th. For all the other loans that aren't necessarily federally held, including federal loans that might be held by a commercial lender or schools or private lenders, you should contact them directly and explore what your options might be. Okay, the biggie, right? What if I can't afford my mortgage payments? So again, under the CARES Act, borrowers in federally backed mortgage loans that are experiencing financial hardship may request forbearance by making a request to their mortgage servicer. So what's a federally backed mortgage? Well, that might be an FHA loan or a USDA loan or a HUD loan. So loans that are backed by the federal government, right? And so it's really about connecting to that mortgage servicer and asking for forbearance. So what is forbearance, right? It basically allows your mortgage payments to kind of be put off, so you don't have to do it, up to 180 days. So that's basically almost 5 months, right? And so it really releases the pressure valve, I think, in terms of having to come up with that money, especially when your income is not coming in the way it used to. Other mortgages, meaning not federally backed mortgages or second mortgages, again, you're going to have to connect with the lender directly and see what their options are. So they may also be able to provide you with this 3 or 4 and 5 month forbearance. They might allow you to extend the loan. They may help reduce interest, right? Or they may have some other flexible ways to repay. And as I mentioned earlier, the CARES Act is really encouraging lenders not to report late payments to the credit reporting agencies or waiving late fees for borrowers who have gone through the process of forbearance. So it's really about connecting with the lender. So no matter which lender, whether we're talking mortgage or student loan or car loan or a second mortgage, you really want to be able to get the information of the person that you've talked with. And so that is with the name of the representative, if they have some sort of ID, their contact information, if there's a case number that has been developed because of your phone call, you want to be sure that you have that information. And once you come to an agreement, you want it in writing, right? You don't want to be in a situation that down the road a piece, they come back to you and say, no, that's not what we agreed on. So it's really important to get things in writing. So you may start the conversation over the phone or online, but you really want to make sure everything is tied down in a letter. So one of the things that I've really noticed is, especially in the auto industry, there are some amazing deals. 0% financing, no payment for 6 months. I mean, it's just incredible. If you've got the money, it might be a really great time to buy a car. But if your income is really dropped, this is not the time to fall for those wonderful sales gimmicks, because there's a lot to think about, right? We don't know when your income will increase, whether it will increase to the same level that it was before this all came down. And so you don't want to put yourself in a place, right? In a place where you won't be able to afford the payment once the payment comes due, right? So we have no idea, you have no idea what your other expenses might be. And so again, I would really be very cautious about investing in an auto loan or other kind of loan that comes your way being offered at this time. The other thing that I've really seen a lot of information about is the scams. And those really smart people who are not using their brains for good things and are coming up with scams are being very creative. And so there's all sorts of things that are coming by phone call, by email, even by texting that are trying to get money out of you, right? So here is a listing of some of the ways that those scam artists are working, right? They may be trying to connect to the stimulus check or the stimulus payment that I mentioned. And so they're calling to ask sort of for verification of your information. Another scam is someone posing as the Treasury Department, and they're offering grants or incentives or ways to really provide money to you, right? Supposedly free, but oh gosh, you have to pay this application fee in order to get it. And then of course, there's no real money. There have been accounts of people being scammed by thinking that the IRS is actually calling them and needing account information. And, you know, from everything I've read, the IRS will never call you. So that is certainly a scam to be alerted to. Another has to do with debt consolidation offers, and especially people who are feeling stressed about credit. There are people out there who have been susceptible to scammers pretending to be lenders, offering to help consolidate their debt, giving them, and then the scammer asks for, you know, credit information and or a fee, right, to process the consolidation loan. And of course, then they just skip out with your money, either by accessing your existing credit or by skipping out with that loan application fee. And then lastly, I just wanted to report, as it relates to credit, is scammers pretending to be a credit reporting bureau representative trying to verify information. And so again, they're trying to get information where they might then use that information to open credit or use your credit fraudulently. So here are some resources that are out there. And so I wanted to share one that is specific to cooperative extension. We have a resource called Managing in Tough Times, and it is actually a whole series of articles from you know, credit-related topics to building a spending plan to talking with spouse or children about money-related issues. all sorts of topics, and that can be found on our financial management web pages. In terms of the credit card, the loan, student loan relief, and the mortgage relief, the resources I pulled come from the consumerfinance.gov, which is the Consumer Financial Protection Bureau. They provide very easy to understand resources, and there's one on each of the kind of credit topics that we talked about: credit card, loan relief, and mortgage relief.